Well, good morning, everyone. This is RJ Kelly. It is great to have you back with us for day 4. We're going to give, it's still a few minutes before 9 o'clock, so I see a lot of folks coming in, which is great. That really makes us feel good, and you will not be disappointed. We've had 3 fabulous days so far, and I'm seeing many of these names returning again and again, which is terrific. And also I see Rick, good to have you with us now. I know you were traveling, and good to have you. Candace, great to see. I think this is at least your 3rd day, if not 4th. So you will not be disappointed. As I say, we're going to give a few more minutes for folks to come in and join us here. Just remind you that you are all in listen-only mode, but there is a chat window. And so if you can be sure and if you've got a question for our panelists, we are going to be holding those until the end of our time together today. But then we will attempt to get to as many questions as we can. We are scheduled to go from 9 a.m. to 10 a.m. Pacific Daylight Time. But yesterday, again, there were just so many good questions of our elected officials that we ended up going a little bit past that. So if that's you, if you need to duck off before the end of our session today, don't worry, we are recording it. And just send an email to the email you see on the screen there. Send it to rj@wealthlegacygroup.com. And we'll be sure and get you a link to the video. And if you want to hear some of the previous days as well, just let us know. I do want to remind you, and I don't mean to be a broken record, but this is not only about bringing the best in terms of resources that we can find to our community, but it's also to make a difference in our community. And obviously, helping business owners stay in business and therefore save jobs is pretty important. In addition to that, it has never been more critical than today that we help the San Diego Food Bank provide meals to many that are struggling, and particularly the children, because in our county right now, it's 1 out of 5 are not sure where their next meal is coming from. Many students are from economically disadvantaged families, and so their secure meal is at school. And unfortunately, because they're not participating in school, they're not getting those meals. So we've been asking your help to make a contribution of any amount. We're suggesting $25 at least. We've actually had one donor who gave, an anonymous donor, who gave $1,000. The food bank here in San Diego, we'll be chatting a little bit more about them tomorrow as well, is incredible in terms of their impact. They can provide 3 meals for every dollar, 3 nutritious meals. And so I invite you to go to their website and just take a behind the scenes 2 or 3 minutes. And you can see some of the amazing things that they do and how they're able to do that so cost effectively. Okay, well, we're at 9:01, so let's kick this baby off. I'm gonna see a few more. Okay, it's great. We're getting some great questions already, so bear with us. We will get to them. Okay, so I'm RJ Kelly. I'm founder and chief visionary officer of the Wealth Legacy family of companies and Wealth Legacy Group here in San Diego. There is, by the way, another Wealth Legacy Group, a couple of now wonderful friends of mine that are marriage and family therapists that deal with high income, high net worth families, but they're up in the Bay Area. So when I found them, I said, look, I own the name, but I love what you guys do. So you keep it, and we've become as well, and we've become great friends. So if you need some folks that can help with wealthy families to deal with dysfunction that's at every family, I can get you straight on some great folks. But at Wealth Legacy Family Companies here in San Diego, we help clients, typically the business owner client, which is why one of the big reasons we're doing this webinar series. But we help them take those vague intentions that, frankly, not just business owners, but many of us have in our lives, those things that we want to get done, vague intentions, but how do we make those practical, specific outcomes, whether that's selling the business and not paying tax or deferring tax for 30 years, whether that is keeping the family together or bringing the family back together. The fact is, we're all whacked. Every one of us. There's some days I'm more whacked than others, and you are too. So we need each other, and we need to have some outside advisors to come in, look in, see where the roadblocks are, and help get that unstuck. As well, we help clients with the advisement of their assets and their money. That's the wealth part of it. We also help clients with the purchase of insurance, life, disability, and long-term care insurance. And then also in the succession issues. So as a certified exit planning advisor, that's just part of what my day looks like. So an amazing team at Wealth Legacy Group. Thank you very much, led by my wonderful wife, Vivian. So quick recap. Reminder, you're in listen-only mode. Daniel Amaro. Thank you, Daniel. Daniel is behind the scenes. He is the man behind the curtain at Clarinet Solutions, LLC. And that's with a K, not a C. Daniel was on a remarkable technology panel that we had on Tuesday. So the fact that you've logged in on a webinar shows that you have confidence in Zoom, but we're here to tell you that it's absolutely safe as long as you do it correctly. And so if you listen in on our Tuesday technology, you'll not only learn how to do it correctly, but you're going to learn a whole bunch of other stuff that in terms of either how to stay in contact with family, with friends, with your customers, find new customers, and of course your team, your work team. And you also need to protect yourself against the bad actors out there. There's more bad stuff going on than ever. So that's you'll want to hear on Tuesday. Monday we had Max Bolko and Dr. Andy Ward and retired SEAL Team Captain Rob Monroe share with us about how to overcome fear and uncertainty and get comfortable in being uncomfortable. Again, we had Daniel Amaro, Daniel Sakow, Sanjeev Prabhakaran, and Jorge Ruiz de Castilla as our tech panel. Incredible. You want to hear that. And then yesterday, we had an elected official panel and just some of our favorite people, Supervisor Kristen Gaspar, State Senator Brian Jones, and then Congressman Scott Peters as well. So it was fascinating. As I say, we had a lot of questions. And then today I'll be introducing our panel very quickly in a moment. And then tomorrow, you are going to want to hear tomorrow's session as well. We've got Dr. Nick Ephantidis. Nick is, or Dr. Nick as we call him, with a last name like that, you understand why we go with Dr. Nick. But Dr. Nick is a phenomenal gentleman. He is a gentleman with a capital G. He's literally on a hot wire phone with the White House. He is the chief county medical officer. So he's going to be talking about when do we get to return to normal from a healthcare standpoint. And then I've also got Cameron Killeen, City National Rockdale, who they are institutional money management firm. We work with them quite closely. And so Cameron and I are going to be talking about tomorrow, when do we get to return to normal financially? Where are we in the economy? I've been listening to some of these scary stories that the media is putting out that is just not accurate. So you need to tune in tomorrow, 9 to 10, and get the straight scoop, as straight as we can make it. Again, obviously, nobody's crystal ball is crystal clear. So we're going to be tackling that tomorrow. Today, I've got some wonderful speakers. We've got Casey Hopkins and Chris Weissman. They're from Home Street Bank. I've been so impressed with, particularly Chris, you have been a rock star with getting back to me at all hours and how you're doing that, juggling family responsibilities and the massive influx of loans to you and Casey and your team. I don't know, but thanks so much. You're going to enjoy getting to hear from Casey and Chris. And then Miriam Torres Baltes is a loan officer with CDC Small Business Finance. And I've never heard of you before. I'm so glad that we found you because you're bringing some things to the table in terms of loans and that I have not seen before. And I'm trying to advance my slides, and for some reason, they're not advancing, which is a really frustrating sort of thing when you're a control person like I am and you don't have control of your PowerPoints. Okay, so trust me on that. And then also, last but not least, we have Phil Giacinti. Phil, I've known and been a raving fan of Phil's for probably 25 years. Phil is a remarkable litigation attorney, but it suggested to me the other day, RJ, you need to have something on this panel about what happens if the money doesn't get there in time and the business owner has to either close their doors forever or they can close their doors and reorganize. And there's a brand new, it's not a brand new code section, but it's dealing with Chapter 11 reorganizations. And just on February 19th, Congress enacted in bipartisan legislation some things you're going to want to hear more about today. So Since I can't get my screen to unstick, I'm going to put this over, and Chris, let's get you unmuted, and also Casey, there we go. And my friend, let's have you fire away.
All right, RJ, thank you. Again, this, as you mentioned, this is Chris Weissman. I'm with Home Street Bank, and you know, I really admire what you're doing for the food bank, RJ. That's one of the many reasons that we're participating on this. This is not a sales call or a call to arms. We're here to help people. We're here to help business owners, and we are here to, you know, help guide them through, because it doesn't only affect the businesses, the owners, it affects their families, employees, and their families, and kids throughout the county. And we just want to do whatever we can to get as much information out there as possible. We are in unprecedented times, as we hear in the news quite frequently. And while anything as large as the stimulus package, whenever it comes out, it's never smooth, it's never easy. There's a lot of hiccups and bumps in there, but I'm encouraged that we are actually doing something, and something early on in the process. Many of us remember 2008, and I firmly believe that these kind of assistance packages wouldn't have come out for 6 to 12 months in the past. So while not perfect, things are trying to be done. We are going to talk initially about the Paycheck Protection Program, because as RJ mentioned, we are getting hundreds of applications around that, and that rather than starting with everything else, that's what people want to hear most. So we're going to start with that, mostly high level, because we can't go over hundreds of pages of information in one sitting, and I'm sure we'll have some more specific questions in the Q&A portion of it. But we'll also be covering other things in the CARES Act and some other programs available, because the PPP is not a universal solution to everything. It doesn't cover everything that you might need. So Casey, Miriam, and I will be going over that, and happy to answer questions. So I'm going to turn over to the Paycheck Protection Program quick facts to Miriam.
Hi, thank you so much, Chris. So my name is Miriam, and as RJ and Chris mentioned, I'm with CDC Small Business Finance. We've been around for 40 plus years. We're a nonprofit organization. So I do want to kick off before we get into payment protection program. I know that this is going to be a lot of information. You know, all of us have been in the industry for 15 plus years. So this is kind of our lingo, and we understand it, you know, more. You know, it's something that we talk about, do all the time. But I wanted to kind of explain to you guys, you know, what SBA means. So SBA is the Small Business Administration. So it's an arm of the government. There are what's called SBA lenders. So that would be somebody like Casey or Chris, you know, any of the bigger banks, community banks, and even lenders as myself. We're SBA lenders. Now, there's also what is happening right now is through some of the programs that are being offered, for example, the SBA disaster loan that the president talked about originally, that money is actually coming directly from the Small Business Administration. So that money is directly coming from the SBA. So that's not coming from us as lenders. And later we'll provide you guys links and more explanation on that. But I want you guys to understand that even though we're an SBA lender, we're still what's called a direct lender. So what that means is the money comes from us when we do SBA loans. We just have a guarantee from the Small Business Administration. So to explain that a little bit further, what that would look like is you come to Casey or Chris or to me as a lender, and you need a Small Business Administration SBA loan, right? So you ask for $100,000. And then what SBA does is they guarantee us as the lender a percentage. So let's say they guarantee 80% of the $100,000 loan that you, you know, requested and got from us. In that case, if your business fails, what SBA is saying is, if this person's business fails, I guarantee you 80%, or in other words, $80,000. So what SBA is trying to do is encourage us to broaden or maybe take more risk or maybe grow our appetite as a lender so that we're lending to more small business owners. And so that being said, some of the products that we're going to talk about are SBA as us as lenders, and then only the Small Business Administration disaster loan is from SBA itself, and we'll give you guys a link. And so whenever historically there's been a disaster like 9/11, for example, and now this is what is currently happening with COVID-19, that is the only time the SBA directly lends. So I just wanted to clarify that for you guys, because I know there's a lot of confusion, and I want you guys to understand that as we start. So, okay, so now I'm ready for our first slide.
And Miriam, well, I'm responding to some of the questions that are being asked. One of the questions that you might as well take right now is,
sure.
Since you're talking about CDC Small Business Financing, is someone had been told that you were a hard money lender. And I just type back to say, nope, that is not the case at all.
Yeah, no, not at all. So your first and best bet is going to go with someone like Chris or Casey, or any of the bigger banks, whatever fits your appetite. But that's going to be your best bet as a small business owner, because they're going to give you the best fees and rates. However, that being said, we are not a hard money lender. We are a nonprofit organization. As I mentioned, we've been around for 40 plus years. And what we do is we're kind of right after the bank. So if your banker tells you, hey, I'm so sorry, you don't qualify for reasons like maybe your credit is not meeting our minimum requirement, or maybe your cash flow isn't as perfect as it needs to be, or you know what, no, your business is younger than 2 years. We specialize in helping clients with startup loans, and helping clients that might have a little bit lower credit score than banks will typically allow. That being said, our interest rates are never over 10%, and they can be as low as 6%. So definitely not a hard money lender, but obviously your best bet would be at the bank. Okay.
And I'm going to ask one other favor too, because we had a question yesterday that we just didn't have time to address. But as you all are sharing, one of the big questions that I've been asked again and again and again, and as one of our listeners asked yesterday, how do we know whether to keep paying employees or not? Because there is definitely controversy about we should just send employees off to the unemployment or the partial unemployment benefits they can receive, or are we better off to keep our employees on payroll, continue to pay them, and go for the PPP? So you don't need to answer that now, folks, but be sure and address that, because I'm hearing that question quite a bit.
Okay. RJ, we'll cover that later in the presentation.
Excellent. Thank you, Chris.
Right.
Okay. And since I'm driving the slides on my end, you'll need to tell me when to move the slides forward.
Sure. Okay, so let's dig in. So Paycheck Protection Program is part of the ACTS, or the CARE Acts program, that was actually last Friday released. And it's designated to provide a direct incentive for small business owners to keep their workers on payroll. So we're trying not to have people get laid off, right, and have to go on to unemployment. It is only for companies that have 500 or fewer employees, and the employees must be in the U.S., the business must be in the U.S. It's also for independent contractors or nonprofit organizations. A portion of it is forgivable, and we'll talk a little bit more in detail about that. So actually 75% of it is forgivable as long as it's used for payroll. And then there is no collateral required, and no personal guarantees required, which is absolutely fabulous. Okay, and then if we can move to our next slide. So you might be wondering, okay, so how much can I borrow? Do I fill out an application and put how much money I need, since I can go up to 2 million? Not quite. So what you want to do is you want to take 2.5 times the average monthly payroll costs of 2019. So you're going to look at everything that you have, all your payroll costs for 2019, and then you're going to see what is that average amount that you're paying payroll, and then multiply that by 2.5 times. That's going to be your number. So let's go ahead and go back. So we had an example here. So for example, an average monthly salary of $75,000. So you have one employee that you pay, or I'm sorry, you have a total, let's say in 2019 of $75,000 that you pay to your employees. And so then what you do is times 2.5 would be $187,500. So that's what you can apply for the payroll portion of a loan. Okay, so there is another portion of the loan. So if you're using 75% for payroll, the other 25% can be used for rent of your business. It can be used for mortgage payment for your business. It can be used for interest or utilities. So basically, so you can keep the lights on until all of this hopefully goes back to normal. All right. So,
hey, Mary, may I jump in there? A little clarification. This is just to determine the loan amount you can apply for.
right.
It's determined by the monthly salary. The uses we're going to go through in the next couple slides, and they include things other than payroll. But the total loan amount is based strictly on monthly salaries.
Correct. Correct.
And payroll.
Does that also apply to independent contractors, or is it just, how do we determine the type of business entity? And I know the answer, but I'm asking that for one of our listeners.
Yeah, independent contractors, they pool their 1099 from all sources and then do an average monthly for that.
Correct. All right. So the payroll costs for calculations for an employer.
That'll be Casey's turn.
Oh, I'm sorry.
Thank you.
All right.
Thanks, Miriam.
Yeah.
Folks will notice at the end of the slide presentation on slide 14, there's a link to the SBA resources guide. I would direct everyone to download the SBA PPP interim final rule, IFRN. That's the 31-page playbook for this program. So you're going to find a lot of information. It's the most comprehensive playbook so far from the SBA. Pretty sure they'll be doing other iterations and revisions, but to start you out, that's the best place to get your information. I would also encourage businesses to reach out to their payroll companies. They are obviously the specialists within this respective field on the documentation that you'll need to provide to the institution reviewing your PPP application. Some of the larger ones like ADP and Paychex, of course, are aware, and I believe they've tried to implement kind of just a one-click type of download. Maybe other smaller payroll companies. I know here locally in San Diego, Coastal Payroll, they're willing to help clients and non-clients alike with questions. They're offering daily kind of town hall conference calls. So a lot of information from those folks within that field. So for your kind of average business corporation, we're looking to include standard payroll costs. Those are salary, wages, commissions. As they kind of maybe refer to restaurants, as long as cash tips can have sufficient record, you can include those. Standard items like vacation and sick leave, as well as kind of healthcare and retirement funds. Sole props and 1099 workers can also apply on their own. Slide 5 kind of goes through some of the eligible payroll costs associated with those. What I will say, in my experience, the biggest exclusionary item that I've seen for a standard business are those businesses that pay 1099 contractors. Those are not able to be included for an S Corp or C Corp, LLC, simply because you're not paying payroll taxes on those, and the government's looking for the 1099 firm or 1099 contractor to apply themselves.
I'm trying to.
Yeah.
I'm trying to advance the slides again. We're seeming to having a hiccup on getting the slides to the end, so bear with me. Keep going.
Sure. All right.
Yes.
So just talking about some of the excluded payroll costs, you know, on the PPP application, I believe it's question number 7, you know, the employee principal place of residence has to be within the U.S. So if you have some, you know, international folks, you know, those, you know, would be excluded. They also are capping the payroll costs up to $100,000. So anything in excess of that is not included in your calculation. And once again, from slide 6, if you can see it, you're not supposed to be putting any type of you know, payments to 1099 contractors. They're going to be applying themselves. So those would be excluded. What I would say in terms of when you're prepping to apply, all the institutions I've, you know, spoken to with contacts that I have within the banking industry, they all have their kind of, I think, a standard routine list where the application itself, usually a worksheet from that institution so they can see how you've done your computations, and then the supporting, you know, payroll cost documentation. And Christian will be, you know, talking about forms like 940 and 941, other items. But when you finally get to, you know, an underwriter reviewing your file, they are going to need some type of supporting documentation, you know, to support your computation. It's a little bit of art and science. Not every business is the same. We've come up against people who are in PEO programs that have different documentation. So it's just one of those where you're going to have to just, you know, try to provide the best, you know, supporting documentation you can. What I will say is that, you know, these underwriters, and they're probably all the bankers, are not specialists within this. They've kind of had to learn on the fly for all of this reporting and documentations and forms. So, you know, you're going to have to kind of all come to a happy agreement. I'll cite you one example from yesterday. A client of mine came up with the calculation of 1.1 million. The underwriter came up with 975,000. We decided to jump on a 3-way call, and after, you know, 30 seconds, the client somewhat acquiesced and said, I'd rather go with your number and you know, get moving with this process than you know, try to go back and provide, you know, further evidence of his calculation. So at the end of the day, if you at least give it the old college try, you know, the underwriter is there to kind of make a finer determination. So if you at least show them how you came up with your math, gave them the documentation that you have available, you know, I've seen it kind of all work out in the process. Before I turn over to Christian, just wanted to make sure that everyone knew of kind of available resources, you know, for this process, not just how determining the loan, but kind of everything about the program. You have, you know, nonprofits like the SBDC that you have in your local area. You have your SBA district offices that are willing to, you know, provide support. As I mentioned, your payroll specialist could be a key, you know, attribute during the PPP program, both now and months later when you're asking for loan forgiveness. Folks like CPAs and you know, third-party accountants or consultants. So use those folks, you know, as best you can. Chris, I'll turn it over to you.
Great, thank you, Casey. So we've gone over. No, we're still on the forgiveness portion. RJ, if we could go back.
Okay.
So we've gone over kind of what the program high level can do, determine a loan amount. The reason it's so popular is there's a forgiveness portion to it. So after you determine the loan amount and receive the funds over the next 8 weeks, that loan amount will be fully forgiven if the funds are used for payroll costs, interest on mortgages, rent, utilities, interest payments on obligations incurred before February 2020. If they're used over that time, say your loan amount is $100,000 and all those expenses you paid at least $100,000, it can be forgiven. The vast majority of it will be used towards payroll. However, due to the vast popularity of it, the SBA has put a cap that no more than 25% can be spent on non-payroll expenses like rent, utilities, mortgage interest, and still be forgiven. So if you spend more than that on payroll, then that amount will not, or if you spend more than the 25%, then that amount will not be forgiven. But remember, the worst case scenario you can have, even if nothing is forgiven, you have a 2-year loan at 1% interest. And right now, the main purpose is to get through to the other side of this event. So, RJ, if you can move to slide 8.
Mm-hmm.
So, great program, very popular. The big question is, where do I go? What do I do? Strongly recommended to start with your existing bank where your business account is held. That's the fastest, easiest way to go. They know you. They should have a lot of your information. Best place to start. Common documents needed would obviously be the application, some payroll documentation, which could be a quarterly 941, W-3s, tax returns, especially if you're sole proprietor or independent contractor, QuickBooks, tax returns, financial statements, basically anything that you're using to calculate the dollar amount you're applying for should be provided. That is one of the things we need to do to justify the loan submission dollar amount.
Hey, Chris, RJ here. One of the things that we heard yesterday because Wells Fargo happens to be a pretty big player in this, but they've been limited to $10 billion of the $349 billion pot to go after. We heard from Congressman Peters yesterday that they're making a proposal that cap would be lifted from Wells Fargo. The only reason I raise that is that if they're not fortunate enough to be working with Home Street Bank already and they have to slum, they could go to Wells Fargo if that's where they are already, especially, and that pipeline might be getting reopened up better. But that's been, again, I had probably 6 phone calls yesterday just simply from people that are with Wells Fargo that couldn't get any help.
Well, they are the largest SBA lending institution in the country, so common sense would tell us that they would figure out a way to lift that cap. I mean, the cap was put on for reasons, but we're not going to get into that right now. So.
And while you're on this particular page, Chris, could you shed a little light on that review process and sort of the timing of how long it takes to get the process done before the loan gets submitted back to the SBA? And then, kind of how you prioritize the application, because I know you guys are just getting buried.
Yeah, I mean, we would prefer not to have a prioritization process because, again, our goal is to really help everyone. It just is a de facto challenge for sheer capacity. If I had $100 I needed to buy $150 worth of stuff, I would need to prioritize. So we owe it to our existing clients, the relationship we built. They've trusted us with their financial solutions, and we need to be there for them. So they are number one on our priority list. Occasionally we can squeeze someone else in there that is moving their existing operating account to us. So I mean, that's from the priority standpoint. Most people are turning all their documentation in within 24 hours to us after they get the needs list and request. The application is pretty simple and straightforward. Probably takes no more than 10 minutes to fill out once you have the calculation figured out. We have a supplemental form to help people figure out their dollar amount. And then the reports for payroll or tax returns are usually saved someplace, so they're a click away. So from receiving a needs list to an application submission to us is pretty quick. Then it has to go through our process to make sure that we have everything that the SBA tells us we need, which does seem to change at least daily, if not more, multiple times a day. And then which is understandable. I mean, it's a humongous program. Not every detail was worked out. They just wanted to get money in people's hands as quickly as possible. So I applaud them for that. It just wasn't quite shovel ready, regardless of what we hear on the news.
I was surprised at how quick it was to fill out the forms, and I know people need to get their forms in quickly. They need to be doing it today. They need to do it tomorrow. They can't wait around.
Well, so we've received over 1,500 applications from our clients this week, so some of it's still manual. You still have to check it, and then you have to input it in the SBA website, which goes up and down because of, again, the volume's high. And Daniel on the line would know that sometimes the servers get overloaded, and so I have people in this bank. I mean, I'm working 12, 14 hours a day. There's people behind the scenes that are sending emails out at 3 in the morning, reviewing packages here at the bank. So as far as timeline, it's really difficult to tell because of the volume. And then again, once you get more and more, you get a little more streamlined in it. But there's also, the SBA is overwhelmed with institutions all over the country, so return times is difficult. But once you get an SBA loan number, those funds are set aside, and then you can finish the process. So we're focused on getting them in, making sure we have what they want, getting them in the system. We have people that are, getting loan numbers as we speak. When they distribute the funds, I haven't heard of anyone actually getting the money yet, but I'm sure there are some out there. So there's too many variables to tell you what the time frame is. And all I can say is we're doing everything humanly possible to get it out there. It doesn't do us any good to slow play anybody. We just want to help people and get them and make sure that they're still in business 2, 3, 4 months from now.
That's great. So we'll keep moving here.
Okay, so the payment or Paycheck Protection Program is the #1 song, so to speak, on the CARES Act, but there's also additional benefits that came out. So the unemployment insurance increased an additional $600 a week through this program. So through California's $450 plus this can get them up to $1050 a week. The PPP program is designed to help keep people on the payroll. However, there's some institutions and some industries that are devastated by this, and that really won't quite help them. So there's, and some have already laid people off. There's an additional option we'll talk about later, the workforce sharing program with unemployment that I'll talk to in slide 13. But just know that the increase in unemployment is designed to keep food on the table and keep people going for what we believe will be a relatively short duration. As part of the PPP program, once you get the money, as long as you're up to full employment by the end of June, that is really what it's designed for. So if there's a little lull, again, remember the 75% ratio must be used on payroll. As long as you are back to full employment by June, that should not affect the ratio of forgiveness. There's also employee retention tax credits for employers that were closed due to COVID-19. That'll be something that I would ask your CPA about. You can defer payment of employment taxes up to 60 days. And they added the $100,000 withdrawal from your 401k or IRA with some stipulations. So early penalty free. There is taxes, but you can spread out those payments over 3 years. So there's a lot of different things, not just the payroll protection program, which actually leads us into the next few slides that Miriam will go over, because again, the PPP provides one solution, and some of our businesses need more than 10 weeks of payroll, because that only covers payroll. There's other overheads. So Miriam, if you'd like to go over one of the other benefits that will help with cash flow, and then some of the other programs that you're familiar with through the CDC and the EIDL.
And guys, just to give us a timeline, we need to wrap up yours in about the next 5 minutes. We can come back to some slides if we don't have time for them, but we do need to give Phil his time as well. So if we can, about the next 5 minutes.
All right, I'll be quick. So the SBA Debt Relief Program, this actually comes from SBA as well through the CARES Act. And what will happen is if you already have an SBA, you will automatically, SBA will automatically pay the principal, interest, and any fees if you have an SBA 7A loan or a 504 loan or a microloan for the first 6 months. So your lender or bank, if you have an SBA loan, should have already sent you a letter in the mail letting you know that your first 6 months or your next 6 months are being paid via SBA or the Small Business Administration. So yeah, and that's about it. We can move to the next one. I know we're trying to go quickly.
Love technology when it works.
RJ, if you click on the area where, or the screen where you have it going on, sometimes it'll, there you go. Okay.
Yeah, what's challenging is because I'm responding to questions that are coming in, and if for some reason, when I come back into the slide presentation, it's not letting me then advance the slides. So then I have to do a quick workaround and get it back in time. So that's what's going on behind the scenes here.
Okay, all right. So CDC Small Business Finance, as I mentioned, we also work with SBDC. We work with Home Street. We work with, all the big banks as well. And what we do is, as I mentioned before, is we're an alternative lender. So we provide an alternative to your regular banking partners. So as I mentioned, your bank should be your first option. But a lot of times they're not willing to do like a startup loan. So we will do startup loans from inception. So with a business plan and projections, if you just decide you want to start a business, as long as you have a little bit of an injection, which is only 20%, then we're willing to do a loan for you as long as you meet our credit criteria, which is typically 620 credit score. So that's what we do. We just offer an alternative to your bank. So we're not a bank. We're only a lender for small business loans, and we partner with your bank in order to kind of fill the gap in when the bank can't quite help you. As I mentioned, whether that's a low credit score or, our cash flow ratio for your business and personal is also a more lenient. How we underwrite is more lenient. We have microloans that are anywhere from 20,000, and normally our loans go up to 500,000. So that's what we do. We also have a department that does 504 loans, which will also partner with your bank, which is basically commercial real estate. Okay, so you can move to the next slide.
Yep, that would be nice.
All right. So the economic injury disaster loan, which is also the SBA disaster loan or the EIDL loan, that loan goes up to $2 million. As I explained at the beginning, this is the loan that actually comes directly from SBA itself. So we will provide a link, I imagine at the end or on our chat box on how to apply for this if you haven't already. The term is up to 30 years. And the interest rate is at 3.75% for for-profit businesses and a 2.75% for nonprofit businesses. There is a $10,000 forgivable grant available. So, we do have a lot of communication with SBA directly because we are an SBA direct lender. And their word is that at the beginning, when all of this started and this loan became available online, there wasn't a $10,000 grant kind of checkbox available. And so if you applied at the beginning and you did not check off the box, you're not going to get the $10,000 grant. So they did ask us to ask you to go ahead and, go back into your application or even reapply if you need to, and make sure to check off the box, because there's just a little box on the right-hand corner that says, do you want a $10,000 grant? So obviously, free money is better than even a very low interest rate. So make sure to do that. And then, Chris, did you also want me to go over this slide?
No, I think, RJ, if you need us to, I'll just hang on and I can go over this after Phil speaks.
Okay.
Or,
Okay.
Yeah.
That might be sure. Thank you. That might be the our best spot here. So we get to.
I just want to make sure I address the unemployment question that came up earlier, so I'll hang on till Phil's done.
Oh yeah, I just wanted to mention too that I'm not sure if this slide, what happened to the slide, but CDC, we are trying to do our part as well and offer some emergency relief to clients. So, you know, we are doing the PPP if you're an existing CDC client with us, or if you become a client with us. And so we are offering a COVID-19 emergency loan for clients that are struggling, obviously with the COVID-19. You're welcome to do, you know, the SBA disaster loan as well that we just talked about, but we're offering up to $150,000 as well through CDC.
Okay. We're going to bring Phil Giacinti in, and Phil, I'm going to unmute your microphone. So the theory is you should be able to talk now. There you are.
Can you hear me okay?
We hear you just fine.
Thank you. Good morning to all the participants. I'll try and get through this fast as I can. Maybe you could put up the first slide for me,
Yep.
if you would. RJ.
And there we go.
We are dealing with, as you all well know, a very insidious disease, and it's ubiquitous. It's all over the place. The bankruptcy code is a federal law, and it is applies to all 50 states. And it is extremely valuable, I believe, in the present day environment that we're having with this COVID-19 virus as it applies to small businesses. And although I've indicated in this first slide that this is even good for lenders. You heard Mr. Weissman and his colleagues talk about the very important aspect of lending, which is the underwriting criteria. And the underwriting criteria, for example, was spelled out in Mr. Weissman's slide, what I need and where do I go? Well, this new legislation, which went into effect February 19th, 2020, does provide, ironically, protections for a lender. They may not agree with me here, but let me give you a couple of examples. When a lender does his underwriting, they're taking a chance. They're taking a chance on the borrower. Well, this new legislation, this new subchapter 5, could very well provide protection after the borrower ends up getting the loan and then subsequently is struggling. And what I mean by that is it just adds another opportunity for the lender to protect itself by following the underwriting criteria with the ability to go to this chapter, the borrower to go to this chapter 5, subchapter 5, as additional protection to protect the loan after subchapter 5 borrower is in bankruptcy. Number 2, in all my years practicing bankruptcy law, which is over 33 now, the one thing you see in very large cases is the lender wanting the debtor to file their bankruptcy proceeding first before they're willing to make the loan. In Chapter 11 reorganization cases, the entity, the debtor entity, should be coming up with a plan going in. And part of that plan, invariably, the first fight is, where are we going to get the money to finance this case? And in doing so, it is oftentimes very beneficial for a lender to say, we will advance the money once we have the protection of a bankruptcy court order protecting our loan on a going forward basis. So those are 2 reasons why, in my humble opinion, this can be very helpful for a lending institution in connection with a borrower. Again, I mentioned bankruptcy law is a federal legislation. The importance of this, and just as a tutorial, there's 2 aspects to bankruptcy law. There's liquidation and there's reorganization. This particular statute, which took effect on February 19th of 2020, is going to last 1 year as a opportunity to see how it's working. We have no case law on this. And that's going to, the case law is going to be coming as we go forward. The Chapter 11 reorganization is not done away with. PG&E in bankruptcy, they don't need small business chapter. Macy's, if they end up having to file, or whatever other big company, they don't need the small business legislation. Well, as you can see from the screen, there are certain requirements to be in this subchapter 5, a portion of Chapter 11. And again, it is designed for the small business, $7,500,000. That debt must be non-contingent. What do I mean by that? If it's non-contingent, that means it's presently due and owing when this debtor files their SBRA case. It's liquidated. At the time of filing, you can put a specific number on it. Narrowing that, the secured and unsecured debt may not exceed $7,500,000. And the business operation must be 50% or more of the debtor's business. Give me an example. This subchapter of Chapter 11 is not designed for the one asset real estate case. It's not designed for the landlord who has one residential building. No, that's not what this new legislation is designed for. It's specifically designed for the small business debtor. It couldn't have come at a more inopportune time, given the number of businesses that are closed because their restaurant can't even open and their employees are being laid off. Getting to the eligibility requirements, again, I think I've covered them all. It's got to be a debtor business with $7,500,000 of secured and unsecured debt. It has to be a non-contingent debt, and it has to be a liquidated debt. And it has to be specifically in a commercial or business activity. By way of example, the parts store for a automobile business. Again, that's a commercial activity. That's not a one asset real estate type case. Let's talk a little bit about the eligibility. Obviously is an individual in this business. a partnership in this business, an LLC in this business, and a corporation in this business. They can all elect the subchapter S benefit, the SBRA, if I can use that term. And that's how you get in there. That's your eligibility. If we could go to the next slide.
And Phil, I might say we probably want to.
I can do that in a real big hurry here. I know you're pushing for time. First of all, and I've got the provisions up there, but forget the numbers. In all of these small business cases, the trustee is going to be required. What's the trustee's role going to be? The trustee is going to be in an oversight role. They're not going to run the business. This subchapter S case can only be done voluntarily, and it's for the debtor to operate the business, not a trustee. I don't want to get ahead of myself, but a court could appoint a trustee, but that's not what is designed for in this subchapter S election. No official creditors committee. This is a cost-saving device. In every big case that I've been involved in, you got a creditors committee. Well, the creditors committee's got to have counsel. They got to have an accountant to review the books and records. In these large cases, okay, that cost is necessary and it is a big expense. We're not going to have that in the subchapter S case. We're not going to bring in a creditors committee. We're not going to have a lot of cooks in the kitchen. When this case starts with a voluntary filing by the debtor who elects to be there, you're going to have a status conference within 60 days. What's the status conference purpose? It's for the debtor to walk into the judge's courtroom and for the creditors to have the opportunity to say, what do you got planned? Where are you going to go? What do your financials look like? And this is the debtor's presentation. It's a status conference. You get the ball rolling as fast as you can. Again, as I've mentioned before, the debtor and only the debtor, the individual, the partnership, the corporation, the LLC that's involved in this commercial business, if I can use that term generally, has the exclusive right to file. No one else can step in and say, we don't like your plan, we want it. We want to file our own as a creditor. Debtor has the exclusive right to file this plan in the period 90 days from the date of filing of the petition. Again, the object here is to get before the court and get things done in a hurry and save money. You no longer need, as you do in these larger Chapter 11 cases, the secured creditors to say, I agree with this plan, or the unsecured creditors to say, I agree with this plan. Okay.
Phil, I'm going to have you, if you could just sort of wrap it up here, because we've got a bunch of questions we need to get to and we're running out of time. So if you could just land the plane for us here. Great stuff.
Sure. Again, just to summarize, if I can, the subchapter S is and can be a godsend. We have no case law to date. I think it could benefit not only the debtor, but the lender in moving a small business along, and they have 3 to 5 years in their plan to make it successful. It freezes the debt that was in place at the time of filing, and it gives the breathing space necessary to try and save a business that needs saving. Thank you, RJ. I hope that helps.
Absolutely. Well, and gang, we're closing in on our ending time here, but I do want to try and respond and ask questions of the panel for us here. And a number of you have asked for copies of the slides, and we're happy to share those with you. Please send an email to rj@wealthlegacygroup.com. That's rj@wealthlegacygroup.com, and we will get you copies of the slides, because you're going to want to have that. I want to also get back to other questions. So are credit unions participating in this program as well, particularly the PPP or the economic disaster loans? So who wants to answer that one for us?
I'll answer that. This is Casey here. So they are eligible to participate. Up to them whether they do. I've gotten several calls, unfortunately, from business owners who have a business deposit relationship at the credit union, but the credit union has said they're not accepting applications, and so they're somewhat stuck in a precarious situation. The fact that their current deposit relationship institution's not offering it, and what they're finding is as they go to other institutions, either those institutions aren't accepting any new applications, or only clients or ones that have a deposit relationship. So they're forced to kind of go through the process of first opening a deposit account and then kind of getting in line with the application. So, and unfortunately, that's the kind of most candid answer I can give you.
Okay. Another question, Sean asked, RJ, we've assisted over 130 small business clients with their PPP applications over the last 2 weeks, and so far no one has received any loans yet. I think that was something, Chris, that you alluded to earlier. Any idea kind of how long it takes once that paperwork is in before it's back out again? And what do you think we're going to see, just crystal ball gazing?
RJ, it'd be purely a guess, to be honest. So 100 applications or so submitted to a lender doesn't mean it's already reached the SBA. So I guess I'd need a little more clarification on that. But even if it's in the SBA, so you see how, earlier in the week, Bank of America had $32 billion and other banks had this. What that means is that they have received an SBA loan number and the funds have been set aside. As I mentioned earlier, I've yet to hear of anyone getting the funds, but due to the volume, I would imagine the ones that have been approved and held earlier in the week, to me, it will take a week or two to get the money at the very least. So
I can't imagine how they're beginning to process any of this, because the fact is you all are swamped. The SBA has got to be just on total swamp, and also to be able to bring in additional loan processors. I've got to think it's going to take time. Go ahead, Casey.
Well, you think about the $1,200 that's coming out. It's taken them three weeks or more, and they already have all that information in their database, where your bank account, your tax ID number, all that other stuff. So they already have everything they need, and it's still taking them 3 weeks to the Treasury to issue that. I can't imagine the SBA or banks are any quicker than that. So.
Are there
what
any
I'd add to
loans
that, RJ, is that while it'd be pure speculation on any type of date, I think as a business owner, what I'd want to know is, well, take me behind the scenes. What are the sequential events that need to happen? So at least, everyone should have at least one person, a point of contact at their institution that might be able to tell them where they are in that sequential event process. So it's, first submitting a complete application with supporting documentation to the institution. The second process is an underwriter or credit analyst or reviewer reviewing that and agreeing to the number of the loan qualification. Third process is sending that to some type of credit administrator or someone with signing authority to approve that loan, followed by that going to a doc preparation team that's going to be getting loan documentations out to the borrower. And then once those executed docs make it back to the institution, you're looking at onboarding of that loan, followed by either a direct deposit of those funds in the deposit account or a possibly wire out. So you've got 5 or 6 key sequential events that need to occur in order to kind of get those funds. And unfortunately, we have no idea how long those are going to take. There's a lot of bottlenecks within that process, as Chris mentioned, because this is an SBA loan. Once the loan is approved, that doc preparation team needs to input a multitude of information into the SBA portal system known as eTrans, that is continuously slowing down, crashing with so many lenders trying to upload that information. But that does result in an SBA file number. What we've heard is when that occurs, that those funds kind of are reserved to kind of know how much they're depleting that $350 billion some amount that has been applied to this program. So that's maybe one thing that a business owner can take away is just asking the point person, hey, where am I kind of within that process, since a date's almost impossible to predict.
I just want to
Casey, building on what you just said there, Miriam.
Yeah,
I was going to say, Miriam, you've got some things that you can do in terms of more quickly getting some money into people's hands.
Right. Yeah. And I want to reiterate, no matter what application it is, if you're applying for our, emergency relief loan, or you're on the SBA disaster loan, or you're applying for the PPP, the most important thing that you want to do is to make sure that you turn in a very complete application. If your application is not complete with the volume that everyone has right now, including myself, you're just going to go back to the bottom of the line, most likely. So, just be precise and make sure you fill out every form, make sure you read the instructions, and you're uploading or emailing every single document that's needed, or financials, so that your application is processed, quickly. So we, as I mentioned before, we have, in addition to doing PPP loans for our existing clients, we are one of those few people that are also offering it to new clients, only if you take advantage of our COVID-19 emergency loan, which is for any small business owner that's being impacted by the coronavirus. It's a 2-week turnaround time, and it's up to $150,000. You do have to have a minimum of a 680 credit score for that product.
So I'm going to pause for just a second here, because we're a little bit over time, and I know we've got some more questions queued up. So I do want to get back to them. But in the meantime, I just want to say thank you to Home Street Bank, and to our wonderful speakers today, to Casey Hopkins and Chris Weissman from Home Street, to Miriam Torres-Baltes, who is with CDC Small Business Finance, and to Attorney Phil Giacenti for sharing with us. Also, we want to thank our primary sponsors, financial sponsors, which includes Home Street Bank and Pacific Life, wonderful life insurance company that does far more than just life insurance. In fact, far more. Vistage, if you're a small business owner and to a large business owner, you need to have a cadre of people that you can trust and be with, and that has got your back. And that's truly, while there are other organizations out there, I find I'm a huge fan of Vistage, and especially Dale Robinette, who is a master chair, but also here in San Diego, he's the Vistage chair to the Vistage chairs. So reach out to us. We'd love to get you connected with them as well. And then also now City National Rockdale, which is an institutional money advisement firm. We work with them with our larger cases, larger client cases, but they do things in terms of private financial advisory services that normally I don't see until we get to 10 million and up. And we can do that with just as little as $1 million. So thank you for all of our sponsors, all of our speakers, our wonderful panel we've had today. We will have to take a few more questions, but if you need to go, we are recording this. Just send an email to rj@wealthlegacygroup.com, rj@wealthlegacygroup.com, and we will get back to you and get you this slides, and also the link to the presentation today, as well as then a link to go to the food bank, so that we can, our goal is to raise 15,000 meals to be able to share through them. So with that, let me go back to some of our questions. Let's see. So basically, the loan programs are available for all types of businesses: sole proprietorships, partnerships, S-corps, LLCs. And someone even raised the question about independent contractors. I think, Chris, you had mentioned that in your portion of the presentation. So can the independent contractors start applying now as well, or do they have to wait, or what's the status, and clarify that for us, please?
Yeah, this is Chris, RJ. The independent contractors with the original rollout are eligible to apply as of tomorrow.
Great. So for my friend Andrea, who asked that question, there you go, Tiger. So The tax credit, could you elaborate on that in terms of this tax credit per employee if you get the payroll protection or payroll plan? Could you, one of you, clarify that for us, please? Casey, is that one for you, or on the tax credit?
Unfortunately not. I'll defer to either one of the other panelists, or unfortunately have to direct someone to a payroll specialist.
Mm-hmm.
Yeah, so there is a tax credit. I only threw it out there so that they can talk to their CPAs. The bill, I can read it. Again, I'm not a tax expert. It says the employee retention credit for employers subject to closure due to COVID-19, eligible employers will receive a credit against applicable employment taxes for each calendar quarter in the amount equal to 50% of the qualified wages. And then it's spread out over, I think, 2-year term. So it would be more of a question that I would ask a CPA or your tax advisor. I just wanted to have it out there so that they know to ask those questions.
Perfect. So we've got, let's see. Gosh, sorry. We're looking at a question about hotels. Are there lenders that are specializing in that area of hotels that, or is it more a wide platform? Do we have a wide footprint that are addressing that particular industry?
I'm not sure I understand the question.
Yeah, I'm not sure I got it either as well, because the question that came in was, are there any industries that are ineligible? You went over that a little bit, but some banks are not lending to hotels at this point, for example. That's what one of our questioners is saying. And so wondering, are the SBA programs and the things that you've just been describing, the three of you, are those eligible, to the best of your knowledge, for hotel owners?
Miriam, do you have any programs specifically for hotel owners?
No, unfortunately, we don't do hotels, not in our 504 or the loan program product that I do through Smart Growth.
RJ, what I will do is I'll start looking to, and then if you can find out who asked that question, I'll give you the information that I can find.
Great. And Richard, if you could go ahead and send me that question via email, and I'll work with Chris, and we'll look with some of my other lenders friends just to ask that question, see what we can find to get an answer for you on that. If someone wants to move their banking relationship because it's just, for a variety of reasons, not working, is that going to happen right now during these COVID days, from your perspective as bankers, or is that something that the business owner would need to wait on until after things settle down here in a couple of months or longer?
We're still open for business. I've brought on, I think, 4 or 5 new clients just this week. I mean, all 5 of them wanted to apply for the loan as well. But again,
no surprise.
Just having, there's no guarantees. There is a limited amount of money. There is a limited amount of time. The word is they will add more to it, so there's never a guarantee for it. But if their bank's not helping them and they're looking for someone to advise, then yeah, I believe banks are accepting new clients again, but there's no guarantee that the PPP will come with it. So.
Mm-hmm. Here's a question to Phil. Phil, the question is, obviously the first line of defense is to get some money in the door, but as you pointed out, that may not be sufficient. They may need to take a longer period of time, and I love that about Chapter 11, as you shared, the business owner may have 3 to 5 years to reorganize their creditors and to be able to get things back in order. If somebody wanted to just have an initial conversation, is that something that they could reach out to you on? Or if someone was to begin that process, what range of costs would we be looking at for someone who wants to start down the path of that Chapter 11 to be able to put the abeyance on the creditor issues? Can you speak to that at all in those two things?
I'll certainly try, RJ. First of all, I'm happy to answer any questions anybody will have. Again, trying to talk legalese, but give it the presentation in such a way that people could understand some of it from a general standpoint. It was difficult in a short period of time. So I'm available.
Mm-hmm.
I'm happy to answer any questions. They can email me or they can call me on the phone, and if I don't answer, leave a message. But the importance of this is, and maybe this will help. If I have fixed debt that makes me eligible as a business owner to be in this proceeding, the date I file a petition is like any other bankruptcy case. Debt collection, creditors suing you, it all stops. And the breathing space and the opportunity is strictly within the debtor's control. You got 90 days to come up with a plan to pay all your debts over a period of time, and the period of time can be 3 to 5 years. You got to give them the opportunity and the time frame to correct the business. If it isn't worth correcting, don't bother filing. Don't luggage rack on a hearse.
Mm-hmm.
Yeah, and that happens for the protection of the secured creditor as well. You're not going to take away their collateral. Court ain't going to allow that. All you have to do is come up with a plan that's fair and equitable, and that it provides for all of the disposable income to pay secured and unsecured debt. And then the creditors aren't going to vote. They're not going to say yes or no. The court's going to make the determination, we hope, that you meet the criteria, your plan is reasonable, it's fair and equitable, and we're going to confirm it. And the debt structure then becomes what the court confirmed. How does that benefit the lender? Again, it benefits the lender, if I may say so, by making sure that your collateral is being protected by an order going forward. You made the loan. The loan looks like it could be in jeopardy. The client files this subchapter 5 bankruptcy proceeding, and by doing so, it allows the federal law to step in and allow for that opportunity to be successful. And it's perfect timing with this disease we have. Given the example of the hotel, if I can use that was recently brought up by a question. Maybe you qualify because the hotel you run fits within your structure. The requirements, the eligibility requirements. If it fits within those eligibility requirements and you file, creditors can't come after you. Within a 90-day period, you're not going to lose possession or ownership of your business because everybody's looking to you to say, how are you going to do your best to repay going forward the debt that exists? How are you going to make your business work? How long is it going to take? 3 to 5 years. And the object is to make it successful, to allow them to survive. Again, we have no case law. Yeah.
This is not something you want to try at home, obviously. But I appreciate your willingness. And so you've got Phil's email there and phone number. Reach out to him, have a conversation. This is not something that, and of course you'll want to have others speaking there, including probably your primary lender, because I do know that bankruptcies can affect the ability to then go out for new financing. But this is a brilliant idea, and for the business that just cash alone is not going to solve it, this is something that could be your saving grace and allow you to keep the asset and do the work out. Okay, we've got, I see we still have a number of people online still sending in questions. So startups, I'm not sure that I quite understand the question here. Startups need 10% or 20% participation is what the question says.
Hi.
but I don't know what that means.
Yeah, this is
So,
Miriam. I can answer that. So,
re-
you know, as far as in the PPP, I believe it's January. Since January, your business needs to have existed. For our COVID-19 loan, your business needs to have been in existence since 12/31/19 for us to be able to do an emergency relief COVID loan for you. That being said, when I talked, you know, before, this is Miriam with CDC, I was talking about other loan programs that we typically normally have, which are startup loans, which is different than what's going on right now with the COVID. So we do help startup businesses, you know, typically, and even now, if for some reason you have some sort of business that can, you know, survive or even do well with what's going on right now, we do startup businesses. So for example, if you need $100,000 to get your business going, then we ask that you participate with that, have some skin in the game, and put 20% of your own money, and then we would give you a loan for $80,000. So I just wanted to explain that that's different than the COVID loans that we're talking about.
Perfect. There has a question that was raised about the SBA emergency or the EIDL application. And apparently when this person was applying, the bank only let them apply for $10,000 and didn't ask them about if there was any additional monies that they were wanting. So what would be your suggestion for that person there? It sounds to me like they need to go back and talk to their banker again and say, hey, by the way, no, we're looking for more than 10,000. But how do you do it? What's the professional answer?
So I'm assuming that this person is talking about the SBA disaster loan application on the SBA website itself. So yeah, the SBA told us to encourage people to reapply if they applied early for that loan, because that checkbox wasn't there for the SBA grant for $10,000, which is free money. So if you already applied, see if you can go back in and check off that box. If not, they did say go ahead and send in another application and check off the box.
Hey, Miriam, I think the question is, it looks like they're only taking apps for the 10K and not for larger dollar amounts going through the system. That seems to be.
That's what it sounds like to me as well. Yes, that's what it sounds like to me as well. So I think the short answer is basically go back and make another application. So the 10,000, fine, but that's if they are eligible for more money, and they probably are, they should go back in and do another application, I think is the short answer to the question. Is there one question is about what we can use as the basis for the calculation? That 2.5 times is based on the 2019 income, correct? And is it the last, can you use a quarter's worth of income for that? Because I think if I remember right, it takes 3 months of average for the application. What if someone didn't start their business until May or June or July of 2019? And can they use just simply a shorter period of time, or can they take the highest of, maybe if one quarter had a higher payroll than another quarter, can they use that? So I'm throwing a whole bunch of questions into you from this one question that was asked, but who's going to take that one?
I'll take that one. This is Casey. So this is part art and science, but you know, if a business is not, the business can somewhat choose. So kind of doing multiple answers here. So the business had to have been in business since February 15th of 2020. If they're a new business, let's say that started at the beginning of the year, they would just use that time period and come up with an average. If the business had started in July of last year, you know, they would go back in time and compute, you know, that average. Obviously, they would, if they've only been in business for 9 months, they want to use the, you know, correct, you know, denominator. They shouldn't be, you know, using a full year since they don't have that in business. Some banks are accepting worksheets that of the date of application going back a trailing 12 months. Other banks I've seen are just using an average of 2019. So it's somewhat what the applicant submits and what the underwriter agrees to. At the end of the day, it should be somewhat kind of a common sense approach and what is fair to the applicant.
That makes sense. But bottom line, it's got to be 2019. We can't squeak anything in from 2020.
I would refute that. Applicants should be able to do a trailing 12 month from the date of application.
Oh, okay.
Not saying
so
that
unpack
all
that more, because
institutions are
that's
following
different than what I'm sorry, go ahead, Casey. I interrupted you. But
not stating that all institutions, lending institutions, are necessarily following that.
So for someone who did start, let's say, in March or April of last year, what you're suggesting is that there are some lenders that are interpreting it that could go with a rolling 12 months that might allow them then to capture the first quarter of 2020?
And subsequently, if I've been in business for 20 years and I submit my application worksheet showing that as of my last payroll was March 31st of 2020, and I'm going to go back a trailing 12 months to March 31st of 2019, here are my numbers, that should be acceptable.
Love it. There you go, Kelly. There's your answer. Let's see. Going back to trying to look at between one of these questions here. And so, Chris, at this point that you're aware of, none of the loans, and I know you guys have done hundreds of them now, but that you're aware of at this point, none of them have funded yet. Is that correct? Did I hear you say that? Or have you had some that have funded so far?
I haven't heard of anyone, any institution receiving funds.
Yeah, nor have I, period, anybody, no. Okay, we're wrapping up here in the last couple questions, or we're going to need actually to cut here. One of the questions is, what types of business can get loans right now without having to wait for the government emergency program? And I think you've answered that. Basically anybody, and including independent contractors, can apply for the PPP loan package, or other, Miriam, perhaps some other things. The COVID emergency relief loans could be available. They're available to any type of business entity, correct?
Correct, just not nonprofits, but all for-profit businesses can apply for ours. And I know you've provided the slide with my email address and phone number. I'm just going to request if you could please email me. That's going to be the fastest way right now to get back to you and send you an application if you're interested in our program.
Great. Okay. Well, let's do this. We're going to need to call this a close. So I do want to thank our wonderful panel. I'm going to put your slides back up here again real quick. So here's Chris Weissman. You can see Chris's phone number and email. And I got to tell you, I'm so impressed with Chris's ability to get back and yet also to keep a balance. But Chris, thank you for orchestrating this, doing a wonderful job putting together slides. Casey as well, brilliant in terms of what you're doing behind the scenes there. And also thank you so much for today, being a part of our day today. Miriam, there we go. Thank you for being a part. Again, there's Miriam's email address and phone number. We've got Phil Giacinti, and went by pretty fast there. So I want to again thank our sponsors, Dale Robinette with Vistage, and you can see dale.robinette@vistage.com to talk about some of the small groups, which are typically 10 to 12 groups that meet during the course of each month. Jim Breland, wonderful friend now from Pacific Life, and again, I want to thank Chris and all of Home Street Bank for being with us as a sponsor. Tomorrow, we'll have Cameron Killeen joining me, along with City National Rockdale, along with Dr. Nick, and about when do we get to return to normal? What's that look like? So again, I am RJ Kelly from Wealth Legacy Group. Thanks so much for being with us. We've enjoyed this, and I hope you've enjoyed it as well and found good value. It's been a love affair for this wonderful community that we call San Diego. And please help us reach for those that are less fortunate. Please help us by working with the food bank. Send us an email so we can get you a direct link, and you can make a donation, and then we can track that. Again, our goal is to help provide 15,000 meals back into our community. Shout out to my friend Karen back in Tennessee, who's been with us, and this is really fun. We've gotten folks calling in from all over and being a part. God bless. Wealth Legacy Group is about helping people with wealth and the challenges that money brings, but it's also about legacy. And the true reality is every one of us are leaving a legacy every single day. Doesn't matter how badly I screwed up yesterday, today I get a fresh start. So the point is, and the question is, what's the legacy that you are choosing to leave? What's that look like? And again, the encouragement is, we all make mistakes, we're human. You know, that's why there's a God in heaven who is, for me, in terms of my faith, that's why Jesus came, is to reconcile, especially in this Easter time. But we're here that we can make a difference in the lives of other people. Sure, the people we love, that's easy, but it's the people that we haven't, maybe our neighbors that we haven't met yet, sending an email out to find out how can we help, calling them up, seeing if maybe you can help with get even groceries. We need to be here for each other. This is America. That's what we were founded on. You're on the call. I'm preaching to the believers. I understand that. Remind everyone else out there. We will get through this together, and we'll be stronger than ever. So again, I'm RJ Kelly from Wealth Legacy Group. Thank you so much to our speakers. Thanks so much to our listeners. Come and join us again tomorrow. Bye for now.